Hello students, in today's lecture we will understand the accounts of chapter single entry or accounts of incomplete records. In that, first of all, we have to prepare a statement of affairs to find the opening capital, or we may have to find opening balance of creditor or opening balance of bills payable, may it be closing balance of cash or opening balance of debtors, opening balance of bill receivable and opening balance of cash, not sorry, the closing balance of cash, opening balance of cash. To prepare the statement of affairs on the liability side, you have to write the opening balance of creditors, opening balance of bills payable, outstanding expenses. All the opening liabilities will be written on the liability side. Advance received income and bank overdraft if there is. Then after opening balances of assets, that is machinery, debtors, bills receivable, prepaid expenses, stock, due income, bank balance and cash balance. Then after it comes cash account. In that, on debit side you have to write opening balance, then after cash received from debtors, bad debts recovered, cash sale, cash received from bill receivables and any other sundry income. While on the credit side you have to write cash paid to creditors, cash paid for bills payable, amount withdrawn by owner, cash purchase, expenses, and here you will find closing balance of cash account, or you may have to find what amount was paid to creditors or what amount was paid for bills payable, or it may be what amount received from debtors or what amount was received for bills receivable. Then after it comes debtors account. On the debit side you have to write the opening balance of debtors, credit sale, sale to debtors, interest charged to debtors, check dishonored, bill dishonored. On credit side you have to write back cash received from debtors, discount allowed to debtors, bill signed by debtors, bad debts of debtors and sale return. At last you will find the closing balance of the debtors account, or here it may be missing cash received from debtors or opening balance or credit sale. Then after it comes bill receivable account. Here also on the debit side you have to write the opening balance and bill signed by debtors. On credit side, cash received of bills receivable, discount allowed for bill receivable, debtors account bill dishonored, bill endorsed to creditors and closing balance. Here bill endorsed to creditors was returned, will be written on credit side. Then after it comes the account of creditors. On the debit side you have to write cash paid to creditors, discount allowed by creditors, bills payable signed for creditors, purchase return, bill receivable endorsed to creditors. While on the credit side you have to write opening balance of creditors, credit purchase, bills payable account, bill signed for creditors. Here it was bill endorsed to creditors. Then after interest charged by creditors and bill endorsed of the debtors was dishonored. At last, if there is a bills payable account, on the debit side you have to write cash paid for that, any bills payable, and closing balance, while on the credit side opening balance and bill signed for creditors. While on the debit side there is another entry, bills payable was dishonored. In this way, these all accounts will be prepared. Then after, final account for these will be finalized.